Well, the one sector, that's not really spoken about much, especially when it comes to the impact of the falling rupee, is the power sector. Now, why are we talking about the power sector? To put things in perspective, just look at India. India has almost 17% of the total thermal power generation in the world. And if you're talking about what is the kind of coal imports that we do, almost 30 to 40% of the overall coal requirements for thermal power projects is actually done by India from abroad. So falling rupee aided with, if you're talking about the kind of the rise that we've seen in global seaborne thermal coal prices, it's been quite staggering. So, to understand the kind of impact that power producers will actually take, and especially the kind of impact that we have in spreads, is something that we need to understand in detail. So, if you talk about it, the Indian IPP coal inventory, while it has been rising gradually, it is still quite significantly below the historical average that we've been seeing. And this necessitates the need for actually going ahead and importing coal from overseas. Now, if you're talking about the power plants, vast majority of the coal inventory has to be rebuilt from the domestic coal. But an important factor that you need to understand is that the gross calorific value and the usage of domestic coal cannot completely offset the need for international imported coal. Now, if you're talking about what Citi has to say as far as the power companies are concerned, the weakening INR, as you can see on your screen, actually increases the stress on the cash flow as well as of most of the power plants, and also increases the coal import cost. Now, if I talk about it, the benchmark seaborne thermal prices has risen by almost 58% in rupee terms on a year-on-year basis, and the rupee has depreciated almost 12% just in 2018. So if you add the both of it together, the kind of impact on spreads that you're seeing is quite significant, and the new likely spread is just around 44 rupees per paise from almost 70 paise per unit. So again, this is something that's had a significant impact on what most of the power companies do. Lastly, if you're talking about the kind of pricing power that these companies enjoy, it's important to understand that most of the long-term PPAs actually have a format in which they can simply pass on the price hikes or the input price costs that they face. In terms of medium PPAs, that's not exactly possible, not entirely possible. And short-term PPAs, the power producer will have to take the entire hit. And this is something that we need to discuss in detail as the discussion goes forward.
Yeah, we do. In fact, let's bring on board then Ravi Uppal, Chairman at Cisco, and former MD Group CEO at JSPL, as well as Ashok Khurana, Director General at Association of Power Producers, joining us in the show this morning. Mr. Uppal, if I could start with you. Morning, firstly. Tell us about the level of coal inventories at power plants across the country, because analysts tell us that coal inventories across power producers are at multi-year lows. Do you think that's the case? And if so, what is the reason for lack of coal supply right now?
Well, the government of India a couple of years ago has suggested that they will reach a production target of about 1 billion ton by 2020. And, we are miles away from that. The growth of local domestic coal production has been abysmally low. And, leave aside the state players like NTPC, the Electricity Board, who get the coal supply on a priority basis. The private producers have really been put under stress because they're not getting this stock of coal. Even the ones who have FSA, they're getting the coal very reluctantly, and that is what has brought us to a situation that the coal stocks at the power plants are very low. If you talk about the performance of the private sector, it's not because of lack of demand that they are not doing well. It's because of the absence of coal stocks in the power plants. And some of the power plants have coal which is less than 1 week stock. And some of them have got the unit switched off. They are not able to run the machines. So I think that we really need to, increase dramatically the production of the domestic coal and ensure that the huge capital investment which is done by the private sector in thermal power projects is not left, So, and as regards the imported coal, it can only meet the requirements of the units which are on the coastline because the hinterland transportation cost is prohibitively high. So, it's a choice between devil in the deep sea for the hinterland units because they can't get domestic coal and that they can't afford the imported coal. So I think the situation is very serious. I am of the view that many of the IPPs which are commissioned, their health can be restored if they can be made to operate at a good power plant load factor, which means 80-85%. then you don't need to, send them to NCLT and try to, bail them out financially. So the key is operate the units and lift the power. Power demand is there, luckily, but just that the units are not able to operate.
Right. Mr. Khurana, let me come to you. Talk to us about the level of coal inventories at power plants across the country at this moment.
Himalaya's coal inventory progressively has been reducing, especially now in monsoon, because the transportation of coal is difficult, and so is the mining. So you have an increasing coal shortage coming up, and the deficit is being made by import of coal, whether for cost-plus projects, or for competitive bid projects, or for market sale in case the demand is more. Because you saw the demand touching about the price in the exchange touching 4.10 yesterday only.
Right. Mr. Khurana, analysts also feel that the coal inventory across power producers are at a multi-year low. What are the key reasons for lack of coal supply?
See, one is increase in demand of power. And coal supply has increased, there's no doubt about it, but it is not commensurate with the increase. And there's a huge problem in the evacuation of coal. So these two factors combined have caused the deficit of coal for power sector.
Ravi, let's understand the equation here. Now, coal companies do have certain pass-through benefits, but DISCOMs will have to pay higher. DISCOMs clearly don't have the ability to pay higher, which means there could be a situation where DISCOMs may actually start consuming less power, or they may be buying less power. Consuming is not the right word. They may be less buying power. So can this artificially create a shortage of power in the country next 2, 3, 4, 5 months?
Well, there is a certain amount of which is there with the power utilities, how much power to, take from the units. So therefore, today you also have competition from renewable sources where the power tariffs are way below, the power tariffs which are applicable for thermal power. Thermal power is, working out to at least 3.5 rupees or so, whereas the renewable power from wind and solar today is, getting supplied at rates between 240 to 280, especially the rates which are recently quoted. So I think, so left to the people, they will prefer power which is cheaper, which is more affordable. But on the other hand, if you look at the thermal power, the basic cost makeup is such, because the coal itself is a major component of the cost. It costs you nearly 50 to 60% of the total cost of power. So therefore, you're in a bit of a vicious trap. You can't get out of coal, and if you get the coal, you buy it at a premium, it works out more expensive, and then your net power cost increases. And that puts pressures on the utilities, because if they buy more expensive power, they add to their own sort of losses and more deficit. So, they become reluctant, the buyers of the power on the thermal side. But if you look at the ground situation today, as Mr. Khurana said, the demand seems to be looking up, and the offtake of power appears quite good. So, but on the other hand, the coal stocks are very, very low, almost like all-time low. And therefore, I know many cases where people have simply switched off the machines. They just don't have coal to run all the machines to supply power. So we have created a kind of artificial scarcity of power.
Khurana, since Coal India is unable to provide sufficient coal to power producers, how much percentage of coal are power producers forced to import? Because I guess that's where the currency weakness comes into play.
See, it all depends on case-to-case basis. Let's say even if you go by the policy framework, the Coal India is only meeting 75% of the annual contracted quantity. Now, 75% of annual quantity and the ACQ, which is called, is anyway also less to meet the normative ability. Just to tell you a difference, the PSUs get 100% of coal as ACQ from CIL, whereas we get 80%. So if you actually see, even if we get all the coal from Coal India, I cannot cross more than 57% PLF. And if you actually see the last month's CA figure, the differential between the plants which are away from mines and those who are close to mines has been also plants getting about 40% of their entitlement to 100% of entitlement. And in PSU, it has gone to 150%. That Government of India is doing this basically to overcome the shortage of wagon. That plants near the mines get coal and the power requirement is met. But in that change of allocation framework as approved by Cabinet, the problem is those who are getting 44% of the entitlement, they cannot even meet the technical minimum requirement, which is 55% for running a plant. So they need to fall back for either imports or the e-auction purchases, which actually takes the price of power up.
Then, Mr. Khurana, just to follow up before we go back to Mr. Uppal, how much does the imported coal cost vis-a-vis the domestic coal rates?
See, the price differential is approximately comes to about at the level of the port comes to about 1,000 rupee a ton. But now it will differ from station to station depending on the domestic carriage point over there. But it's to be very clear, even if the CIL gives us the full coal and then we only import the required deficit, the power purchase cost increases almost about 10 to 12 paisa immediately.
So, Mr. Uppal, closing comments. We are in an interesting scenario. Demand for power is coming back. The dependence on imported coal has not reduced. Coal India is not been able to fulfill the local requirement, and suddenly the cost of power generation is going higher. How will the equation change for investors who are currently invested in power stocks? I mean, ultimately, that's the analysis which we need to bring out for our viewers. That is it a good time to buy power stocks, or it is a bad time, or it is a good time to sell power stocks?
See, my personal view is that the thermal power industry should do well because the country's, the industrial activity, GDP has started to rise. The demand for housing plans are going full steam. So therefore, there is, a clear trend in terms of power demand, growth of power demand. So that trend is irreversible. It will move on with that. Now, thermal units, they should do well because no matter how much focus we do on renewables, they're not in a position to, at least for the next decade or so, replace the thermal power because that's the power which is a controllable power. It's within your resources to do that. So the thermal power is indispensable. It will remain as a major component of the total supply of power in this country. Now, I think Government of India needs to revisit, their policy in respect of the production of coal. The target they set of 1 billion tons they will produce by 2020. They have to see as to what has really led to the major shortfall. Because India has huge deposits of coal. It's just that the pace at which we are mining that has not really been up to what we set as a target. So, I would hasten to add that, the only small capacity of India is along the coastline. Those are the ones who can think of importing the coal from Indonesia or other countries from where the coal can be affordable. But hinterland units, no way, because the cost of transportation is absolutely prohibitive. So, so if you import that coal and even if you blend it 60, 40, 60 domestic and 40 which is imported, the power cost is going to be phenomenally high. So this is something, that we have seen in the past. So they have to depend on local coal. I would also like to mention that government earlier was, sort of auctioning a lot of coal. And in all this auction, the rates they are fixing, the base rates they are fixing are very high. So, and therefore, if there's a shortage of coal, in auctions, we have seen the prices go up to, unbelievably high levels. So whichever way you do, I think, the IPPs in particular, I have my full sympathies with them. We need to ensure that they get their full share of coal and they are allowed to run their machines all the way up to full capacity.
Okay. All right, gentlemen, appreciate your time. It is all about the rupee impact on coal. So we've had a very interesting discussion. We'll continue to stay with this entire theme where how rupee is going to be having impact on coal, car, imports, suddenly mobile phones and imported cars, single malls, a lot of things will change. They will become much more dearer. So that's something which we would be analyzing on a daily basis.